Hello, and a very good day to all the attendees present today. I hope you can all hear me.
Yes.
Am I audible?
Yes, Hiba.
All right. So let's begin. My name is Hiba Shahid, and I'm an academic advisor at Eton Business School. I would like to take this opportunity to introduce Eton Business School and our offerings. Eton Business School offers executive MBA programs, postgraduate diploma, professional diploma, and doctorate in business administration for working professionals. We have more than 1,000 learners and 700 plus active learners at EBS. This includes C-level executives, middle managers, entrepreneurs, and very successful professionals pursuing their executive learnings in 88 different countries. For today, ladies and gentlemen, it is my pleasure to introduce our esteemed guest speaker, Mr. Atish Dahiya, for his webinar on increasing cash flow for businesses through effective debt collection methodology. Mr. Dahiya is a passionate businessman with a wealth of experience in various successful ventures, including being the owner of a law firm, call center, restaurant, training academy, and being a CCMA commissioner. He is also an avid hiker, cyclist, and outdoor enthusiast, having ascended Mount Kilimanjaro and completed an Ironman triathlon. In addition, he has studied the conscious and subconscious mind, gone to Tony Robbins' seminar, performed 3 firewalks, and is incredibly passionate about the power of the mind and the power of positivity. During today's webinar, Mr. Dahiya will provide valuable insights into the background of debt collection and call centers, the technology to be utilized in effective debt collection methodology, and the psychology behind debt collection. He will share his expertise and experience with us and provide practical tips that we can apply to our businesses. To all the attendees, if you have any questions or need clarifications, you can write it in the Q&A section. We will answer them towards the end of the session. Now let's begin and join this enriching webinar.
Good afternoon, Hiba. Thank you for that awesome introduction. Good afternoon, colleagues. I hope that you're all well. I think firstly, I'd like to thank Eton Business School for this opportunity. I think I chatted to one of my colleagues, Joshita, and that's how this started. So thank you so much for the opportunity. And I hope that whatever I have to share with you today will be valuable. So what I'm going to do now is I'm just going to share my screen in terms of the presentation that I have. Okay, can you see that?
Yes, Mr. Dahiya, that's visible.
Okay, perfect. Thank you so much, Iba. All right, so thank you for the opportunity once again. What I'll be discussing today is a topic on how to increase cash flow in a business. What I've done essentially is I've gone through a few extra topics in terms of methods of increasing cash flow, but my specific focus will be debt collection methodologies. Just a little bit about who I am. I am, and I think Hiba has introduced me very succinctly, so thank you so much for that. But I am a practicing attorney. Started off with a very small law firm, and we've grown over the years to be predominantly in the debt collection space. This is a topic that I'm passionate about. It's also a topic that I chose to do at Eton Business School through my MBA, which was the advancement of contact centers into an experience center through personalization. So I'll take you through a few of those topics as well, and how this affects debt collection and business cash flow. All right, so if I can just take you through the screen. Okay, so essentially there are 8 methods of increasing cash flow in a business. The first 3 being lines of credit, which is short-term working capital loans, business lines of credit, and credit cards. The other five, which is renegotiating contract and terms, encouraging faster repayments of receivables, improving invoice processes, managing expenses, and monitoring growth are all operational requirements and operational changes that one can make in their business. So what I'll do is I will take you through all 8 points, just touch on them, and maybe this will actually assist you in your own business or in the company that you're working for in terms of maintaining cash flow. Also, if any of you intend on opening up your own business, I think that this might actually just give a bit of light. Although some being very simple topics, it's sometimes very, very nice to go through it and have this in the back of your mind. So yeah, I think the first thing that I would say is that cash flow is probably the most important aspect. I think in the 13 years that I've been in business, the one thing that we will not be able to do without is cash flow to run the business. And we find that lots of businesses run into problems and eventually close down. And I think COVID was a typical example of where businesses fell flat during the period because they did not have sufficient cash flow to actually maintain their business and hold their expenses. So that is something that I will take you through. And I think another thing in terms of the first 3 points that I have mentioned in terms of getting further credit is that cash flow is looked at in any event from the credit provider in terms of granting credit. So at the end of the day, I think this is a pivotal discussion for any business owner or any senior manager. So yeah, let's just get straight into it. The first 3 points are obtaining short-term loans for working capital. I think that is quite self-explanatory in terms of obtaining small loans, which I think can be accessed from various credit providers in as little as a day. Second point is using lines of credit, for example, overdrafts, etc. These are quite nice because you would only pay the interest, etc., when you actually access the line of credit. So it's always nice to have that available, and you can then use that when necessary. The third point here is utilizing credit cards. This is something that I know very well of. I mean, as we started our business 13 years ago, we didn't have the necessary cash flow, and I personally utilized this to help us grow our business. All right, then let's go into the operational points. So the first of the operational points is to renegotiate terms and contracts. Essentially, this would be to increase cash flow. So for example, if you have 30-day accounts with your suppliers, you could then renegotiate terms to extend that to 60 or 90 days, all depending on the type of work that you're getting and the payment terms that you're offering your clients. So I think it's critical to sort of match these two to ensure that as the money is coming into the business, you then can maintain your supplier obligations. With contracts, negotiating to obtain better terms for cash flow will help. For instance, a retail business with strong seasonal variation in sales that leases its store should look at negotiating larger lease payments during its busy season and smaller lease payments during the slower season. So this is just an example of something that can be done. Or subscription, if you have subscription-based services, you can also do an annual payment or quarterly subscription, which will actually assist you in terms of maintaining that payment and obtaining the relevant discounts. Okay, encouraging faster repayment of invoices, and this is something that I will get into, but there's essentially 5 points here. The one is setting up automated billing, where clients can set up a system of an automated billing cycle, which is pulled from their bank account. For example, you can set up a debit order, etc. You can also increase payment methods. For example, accepting online payments and just making it easier for your client to pay you. Encouraging discounts for early payments can also be a method of obtaining earlier payments and increasing cash flow. And I think a very important point is letting clients choose their payment day. Sometimes, when you sign these contracts, you just sign and you say, I'll pay on the 30th or the 1st, which I think is everyone's first sort of reaction. But I think as a business owner, a business manager, it's critical to actually look at your cash flow, see when clients pay you, and then adjust your payment strategies in line with this. The point that I will take you into in depth will be the timely collection of overdue or past due matters, which is utilization of internal, external resources. And this is something that we, for example, do, where we have a debt collection call center that has in excess of 200 staff, where we literally specialize in debt collection. Okay. The sixth method would be improve invoicing processes. Businesses should look at having automated invoice processes, and they should obviously look at investing in these, which can help to address the cash flow problems. This also helps reducing the number of errors from the accounting department and the receivables team, and provides business owners with a clear snapshot areas. I think it's always critical to have forward for your business. Okay, seventh point is managing expenses, and I think this is something that obviously everyone looks at. In terms of if you are having cash flow problems, the first thing you would do is try and reduce costs. Something that I would agree with. However, I think you would obviously need to look at your operational requirements, and it's critical to not sort of skimp on your service and your service offering by reducing critical costs. And I think there would need to be a fine balance in terms of managing expenses and also managing the service delivery that you give to your clients. I think an important point here to discuss is, to monitor and control growth. Lots of businesses go through growth cycles where they haven't actually planned for it. And I think it's critical to, firstly, before you do anything else, it's always forecast 6 months or a year in advance. Look at which clients are in the pipeline, when are they coming through, plan your cash flow strategies around it. And I would always suggest that you look at one of the 8 factors or avenues in terms of having cash flow available prior to going into a growth phase. This is always advisable. Okay, so now I think getting into it in terms of debt collection, and I will take you through a little bit of IP from our firm. That is literally in terms of debt collection that we do. I'll just take you through a couple of the slides of that. But I think in general, if I can just introduce the topic, and this is something that we've seen over the 13 years that we've been in business, is that the earlier a business ensures collection methods are pursued, the better the chances are of collection. This has been proved time and time again, where early stage collections have a much higher yield rate versus late stage collections. Typically, if I can just maybe go into this a little bit, early stage collections, you can recover all the way up to 10, 15% of the debt that has been handed over, obviously depending on the volumes. Whereas late stage debt, you're looking at between 0.5 to 2%. So there is a big difference in the percentage yields in terms of time periods. So for example, in South Africa, where I reside currently, we currently service the major banks and municipalities, as well as retailers. And, we can obviously assess these trends throughout these portfolios. And I'm pretty sure that, these trends will obviously be or could be adopted throughout the world in terms of what we see. Most debt collectors, who are referred to as external debt collectors, will normally work on a contingency model, where they will require a percentage of the monies recovered on a no recovery, no fee basis. Essentially what this means is that you would not fork out cash to go after your outstanding monies. For example, if there's $100 which is due, and the debt collector is charging you 20%, if that amount is recovered, they would only then charge you $20, and you would then recover the $80 as profit. What this normally does as well is that, normally debt is written off the balance sheet. So there's two parts to where debt collectors can actually assist. The first part is to actually motivate to the accountants why debt should firstly be written off. And it's critical to actually show that you have obviously done what is necessary in terms of trying to recover the funds. So the first point is before writing off on the balance sheet, and then after the amounts are then written off the balance sheet of the business, this would then essentially be profit, which would then come into the business in terms of accounts receivable thereafter. Call centers generally are equipped to handle large volumes of work and operate within various laws and regulations that govern the conduct of debt collection. What we've seen over time is that, and I will take you through it, is that in terms of the technology and infrastructure that is invested in a call center, it's very difficult, I think, for businesses to have the same sort of operations due to the costing behind all of these different services. Second point I'll take you through is the psychology behind debt collection. And I think understanding the behavioral and emotional factors that can influence the actions of debtors. Is it stress, fear, shame, anxiety? And I mean, we all know, I think, as time is progressing, the world is becoming smaller. Things are becoming tougher, and you always hear people saying, things are tough, it's tight. And I think this is where the debt crunch really affects everyone. I think it's critical for debt collectors to incentivize their staff as much as possible. And I think there's a balance required between empathy showed to the client and debtor, as well as the drive behind collections. The methodology behind the analysis is critical, the willingness and ability to pay. And I think, as I've just said now, while the collector is using empathy, active listening and flexibility in repayment solutions is critical. I think something that we always tell our collection advisors is that they are able to furnish a solution to over 100, 150 people a day, which is who they speak to in terms of solving a debt problem that the debtor has. So they really, really can make a difference in this world every single day. Technology plays a massive part in debt collection, and I'll take you through omnichannels, omnichannel platforms in terms of how this is used to improve debt collection, and also just methods in terms of reaching debtors and providing a wide variety of options and communication for communication and various payment methods. So a little bit into the IP of what we do. I think as the introduction was made earlier, we run a call center. We also have a training academy. We have a law firm and a BPO, which is a sales arm of the business, which is rather small right now. But the whole point behind this is to be able to rehabilitate a debtor. I hear time and time again that our clients, which are the credit providers, municipalities, etc., they only have a certain pool of clients which which they can access. So the idea is to take the same client who has defaulted, rehabilitate them so that you can still have them as a client. And I think any business, who has gone out to get work would understand this, that it's very difficult to get clients. The idea is then you wouldn't want to lose them, whether they default or not. And I think that is a critical point that needs to be taken into account. I'm not going to go into very in detail in terms of our strategies, etc., used, but I can go into curing of debt and, different strategies used in terms of early stage debt and late stage debt. But I think a summary would be, if it's early stage debt, the idea would be to cure the debtor to bring them back in line so that they basically cover their arrears, and they can then come back into the customer's environment. But for late stage debt, and I know that the laws regarding prescription, and prescription is writing off debt. So for example, in South Africa, we have a prescription rule that if your debt is not acknowledged for a period of 3 years, it should be written off. And as per the National Credit Act, it's actually made it illegal to actually collect on prescribed debt after 3 years. So that is critical, and I think all of our credit providers in South Africa obviously look at this in terms of timely collections. And I think the purpose then behind later stages of collections would rather be more in activation, where, for example, you get the debtor to acknowledge the indebtedness, send an email, or make a payment, and that payment would then interrupt prescription, which the then 3 years would then start running again. Just in terms of a debt collection process, essentially what the debt collector would do is they would import accounts in bulk. So we literally can import thousands of accounts at a time. We have an analytics team who would then score the accounts via a credit bureau. We would then score accounts in terms of, for example, platinum, gold, silver, and categorize them in terms of which account should be worked first, and then work out strategies to work through the account. So for example, we would take LSM groups, we would take age categories. So for example, between 20 and 35 or 20 and 40, we would then do WhatsApp campaigns. Older, we would then do emails, etc. But I will go into that a bit later. Omnichannel platforms are utilized in terms of contacting clients. We have dialers, which can essentially run through thousands of matters in a day. What the dialer does is it essentially connects to valid answered calls only. We also have a tiered intervention where accounts are worked, and the term in the credit industry is called cradle to grave, where on behalf of a client, if we cannot collect an account, we would make sure that it's gone through various channels to ensure that it's uncollectible before it's handed back to a client. We also have access to various credit bureaus and tracing methods, which allow us to trace debtors through these channels. For example, we can trace debtors, even if there's a number missing in their cell phone number, we could trace a person with those numbers or an address to nearest relative, to neighbor, etc., etc. I think from a debt collection process point of view, as I've said, we handle various collections on behalf of banking. We handle municipalities, retail, cellular, etc., as well as collections through property collections, which is home loans, vehicle asset finance, debt review, deceased, pre-legal liquidations, sequestrations, etc. If I just take you through the legal process and systems, and I'm pretty sure that this would be very similar in most countries, but the process is as follows. Essentially, you would receive a letter of demand if you are in arrears after a certain time period. So for example, in South Africa, which is 7 days, you would then receive a summons. And the term blacklisting only comes through once you are summoned. And if you have not defended that summons, a judge where call centers, etc., obviously show their strengths, I think is one in terms of risk and security, where they obviously have big requirements in terms of protecting the data. I think integrated systems are a critical component. So, for example, a CRM system, which is a debt collection system, a telephony system, a debit order system, and immediate payment channels as well. And I'll take you through a bit of that on the next slide as well. I think what is also critical is integration with clients. So, for example, integrations can be done with clients where they would get access to all the transactions being done at the debt collector every day, which it obviously brings about that sense of security for the client, so that they know exactly what is happening on every client's account or every debtor's account. A lot of the collectors have access to speech analytics, which allows bulk QA of thousands of calls in a call center during a day, which can be QA'd via phrases, and rules can be set in terms of how this is done. I'll take you through omnichannel as well, and Power BI reporting. This is something that can be utilized in terms of analyzing trends, etc., but also providing results to agents, real-time results to the team, and obviously managing your KPIs. So yeah, as I stated, I'll take you through a bit of the omnichannel platform. So one of the things that I found is that I think as debt collection proceeds or advances, essentially it's going to be very similar to social media, where you need to know your data. Algorithms need to run in the background, and I think at the end of the day, personalization is going to come into play, where you need to understand the person that you're talking to. And what we've started doing, for example, currently is we've started identifying 3 points, which is the preferred payment method that the debtor has, the preferred communication method, and the preferred time that the debtor wants you to contact them. And this is 3 points that we've essentially started identifying in terms of personalization and being able to give this back to our client, but also being able to utilize this for future campaigns to have increased productivity going forward. So, for example, communication channels would be your normal, which is your SMS, email, calls, etc. But it will also be, for example, a chatbot, which you would then talk to. We also, for example, have a platform where you can log in, you can view your account, you can self-navigate, you can make a payment directly without chatting to an agent, or you can even have a direct chat with the relevant agent, and they would then reply to you real time. So that would be some of the communication channels. In terms of payment channels, we've got various channels. For example, EasyPay, where you can make payment at various retailers. So in South Africa, we have various retailers, where you shop, and as you're doing your shopping, you can then make a payment at the counter. So this obviously assists in terms of making it more viable and easy for the debtor to make payment. Immediate payments can also be made on the telephone, for example, via Ozo, FastPay, etc. And I think something that we've utilized is activate airtime. So the debtor would then reply via the platform. We would deduct airtime from their from their phone, and that, for example, 10 Rand or 20 Rand or whatever it is, would then go towards their payment of debt. Essentially, what they would do is interrupt prescription. Other technology strengths would be, for example, call line identification. What this is the ability for call centers to not come up as spam. So I know this is how a lot of people actually avoid contact centers, where the call would come up as spam, so ours do not. And it also comes up as being a verified company. And further, there can also be a message across the screen. So as the phone is ringing, there can be a message stating, for example, 70% discount, kindly answer. Okay. I think I've also been into speech analytics and conversation scripting. So this is something that can be obviously monitored from a quality assurance perspective, and you can obviously assure your clients that each of the calls are being dealt with, and with the highest care. Okay, so I want to take you into a bit more detail on that. I think it goes very detailed in terms of omnichannel platforms, but if anyone's keen, I'm more than happy to share this presentation with everyone after we are done. From a speech analytics platform, I think I have explained that. I think one of the points that I haven't explained is data validator. So what this is essentially scraping social media. As you all know, you would need a telephone number and an email address to access social media. We have the ability to then scrape social media to match that data, which is the telephone number and email address, match that to the trace of the person, to ascertain which would be the preferred telephone number and email address to utilize as a first communication method. And I think this is critical in terms of getting first-time contact. Been through speech analytics. This is an example of Power BI reporting. What this enables you to do is, for example, look at your cost effectiveness of the campaigns. And as I have stated, there's always a push towards improving campaigns in terms of getting first time right party contact and conversion of that to an arrangement. I think at the end of the day, if companies engage with debt collectors on a no fee, no recovery basis, it would then be in the debt collector's interest to keep costs as a minimal in terms of increasing profitability. From an omnichannel platform, I think it's critical to obviously understand your market segment, and develop a strategy specific to the client and with the market segment that you're working with. So that these are obviously tailor-made, bespoke campaigns which are made for clients depending on their requirements. Yeah, this just goes into a little bit of difference, or the difference between omnichannel and multi-channel. But I think the key here is to understand that omnichannel allows you to handle a more personalized service to the debtor. It gives you multiple touch points through communication channels. It also gives you further insights into the behavior of the debtor and a strategic approach in terms of approaching them with a sense of, with the aim of having a first-time resolution. I think just to take you through some of the stats, benefits of omnichannel has resulted in a 5% to 8% increase in ROI. And I think this is from a call center perspective, which would essentially impact the customer who is briefing the debt collection call center. It increases retention by 10%. 69% of customers prefer personalized shopping experiences or personalized engagements. It also increases customer loyalty by two times. And I think the critical part there is that whether you're doing sales, debt collection, or you're just trying to increase your customer base, omnichannel platform would then obviously form a part of that process. It allows you to interact with your target audience via channels that they prefer, increases customer engagements and conversation, and reduces customer acquisition costs. I think a summary that I can maybe then give you there is that omnichannel communication impacts of how it impacts customer experiences. It allows real-time responses to the customers across their preferred channel of communication. Customers' first call resolution is key to boost customer satisfaction, which is enabled by data insights into the customer's history. Understanding the customer's needs and interests based on past interaction across all touch points. In summary, this has shown that customers, the way customers expect feedback has fast-tracked the practice of personalization. I think in the contact center industry, or basically in the world as we are now, this has turned from a nice to have into a must have, which has reshaped the way customers will experience contact centers. And I think any business, from an artificial intelligence, technology, and human perspective. The evolution, in essence, is the future of contact centers and will be the enabler of sustainability and profitability moving forward. And I think this is something that all companies would need to consider. This is just a bit of a summary in terms of what has been stated from a data analytics, technology, and human element point of view. And I think through each point, I'll just give you a quick rundown. But from a data analytics point of view, I think businesses will, by 2025, have to become more versatile in how they collect the data and how they combine and leverage customer data, where real-time data will be utilized to gain more meaningful insights into customers, drive innovative experiences, and open up further revenue opportunities. Businesses will have to rely heavily on artificial intelligence, robotics, and data analysis, both historic and real time, to understand their customers and to then service them, or to deliver a more personalized service. Businesses will need to merge customer insights with their own goals to deliver far more sophisticated approach to service. So I think that's from a data analytics perspective. For businesses, from a technology perspective, I think there's a couple of points which need to be looked at from any business, whether you're a debt collection business or not. But I think it's omnichannel. You need to look at digital scorecards, analytics and reporting, cloud-based and remote-based centers, AI into daily tasks, security and data privacy, which is critical, customer routing, speech analytics, text analytics, predictive analysis, self-service customer check-in portals. I think LMS systems are going to be critical moving forward as well, which is advanced learning systems. Voice biometrics will be replacing security as time proceeds. If we have not started seeing that already, I think the rise of video and obviously social media, which is ever growing. From a human element, I think your customer service agents will need to become super agents. They will have to, with the transformation of the contact center becoming an ever increasing important facet of any business, the agents will have to be able to adapt their skills to meet the new demands of the future customer. This transformation will see an increase in self-help by users. And where only, I think, in time to come, only complex issues will have to be dealt with by the agent, where the simpler, more mundane tasks should be able to be resolved with AI. Agents will need to have a strong analytic and problem-solving scalability, as well as advanced technical skills to handle the omnichannel method of communication. I think that's pretty much my presentation. I think I was much quicker than the time allocated, but thank you so much for that. This is just where our offices are situated in South Africa. But I think thank you, and I'm not sure if you
Thank you, Mr. Atish, for that really insightful presentation. I'm sure I speak for all the attendees when I say that we have all learned something new. today, and I think we can move on to the Q&A session. I hope you're able to hear us because I think you're having some internet connection issues. Hi, Mr. Atish. I think you went off. You were having some connection issues.
Sorry, I think I just had some connection issues. Sorry, was my presentation sharing throughout? Or was it
Yes,
not?
it was. I think there's some network issues in South Africa. We hear that from students a lot of times, so probably because of that.
No, 100%. I think it was probably due to that. But I'm glad it was sharing because I thought it wasn't at a point there. So yeah, apologies for that.
Okay, so we have a couple of questions, and while we do answer those, in the meanwhile, if the rest of the attendees have any questions, you can add them to the Q&A box and we'll definitely get to them. So we have the first question from Robin saying, so sorry, I'm joining late. So I apologize if this has been raised already. I'm going to lose connection with load shedding just now. I think Atish, this person might also be based in South Africa. Is it possible to please get a recording? Thank you. So Robin will definitely work on that once the webinar is complete. We'll get back to you. I think Atish is going to share the slides with us as well, and they will be shared with the attendees. So with regards to the recording and all, definitely you can get in touch with your assigned academic advisor, and he or she will guide you about how to access the recording. And there are a couple of questions about the same regarding the presentation and so on. And there's a question from Joshita. Hi Atish, if there are debt collection that needs to be done but managed by the insolvency department, how do we speed up the process?
Okay, thank you for the question, Joshita. So I think the first thing that you would need to do in any insolvency matter, and I'm quite sure that the rules are pretty similar, doesn't matter where you're actually doing it. But for example, in South Africa, if a estate is insolvent, the first thing you would need to do is see whether there are sufficient assets in that estate. Because if you do claim from a insolvent estate, you then could be liable for actually handling costs or be liable for costs of the estate, and that is a critical component to first consider before you actually lodge your claim. Apart from that, I think what you can do is, you can obviously deal with the parties who are actually winding up the estate. It's normally attorneys who are winding up the estate. You can push them. You can even send summons against the insolvent estate. And I think what a lot of people don't know is that prior to a final liquidation or sequestration order, if you take judgment against an estate, even though they say that they are in the process, you then become a preferent creditor. So for example, how a credit provider becomes a preferent creditor, you would then by judgment also become a preferent creditor. And that will obviously secure your payment, through the insolvency process. And I'm not sure if that actually has answered your question.
Thank you for that, Atish. We have a question from Rhoda, not a question exactly, an observation. Thank you for the great presentation. I don't think I have heard of zero charge debt collection here in Kenya.
Okay, then I think this is definitely something that can be explored. I know that there are a lot of debt collection companies who are working in Africa. So I think the reason that I was very excited to actually present on this forum, to be very honest, is that I actually want to grow our business overseas. But if not us, there are many other debt collection companies in South Africa who offer similar services, on a no fee or no recovery, no fee basis. At the end of the day, it just doesn't make sense to throw good money after bad money. And I think that's essentially, it needs to make business sense if you are going to be taking this step going forward.
We also have certain questions about whether the presentation will be shared, and we'll definitely do that once the webinar is complete. We'll get in touch and we'll share the presentation. So I'm sure you can definitely take note of whatever is shared in this webinar today. So don't worry about that. We got you covered. We have a question from Linda. While collecting debt, one of the strategies mentioned is contacting those close to the debtor in case the debtor is unreachable. Would this be intrusive for the debtor, considering that debtors conceal their indebtedness to immediate family members or relatives? That's a very good question.
Yeah, thank you. I think that is a very good question. And I think, for example, lots of countries have, for example, in South Africa, we have the POPI Act, which is, prevention of personal information being obviously disclosed to any other party, except for the party that is actually intended for. So, for example, you would not be able to disclose the reason for the call until you know that you're speaking to the right person. This obviously has proved to be a bit of an issue in terms of getting to the correct person. But I think at the end of the day, the biggest thing in terms of debt collection, and especially for credit providers, for example, banks, municipalities, etc., is that the biggest thing is to get to the right person. And that's where, companies would then employ, for example, tracing agents, utilize credit bureaus, etc., to be able to gain access to this. I know that a lot of debtors, there would be complaints, etc., but it's just how the debt collection company would deal with this. And I think that's where the empathy, care, and professionalism would definitely play a massive part.
I also have a question building on the question Linda has just asked, because I have heard of people who, debt collection agencies where they're not able to reach the debtor, or maybe they're not able to collect the debt from the debtor. So I have heard of people contacting their colleagues in a bid to maybe shame them and get them to pay up. So is that legally allowed? Is that something that debt collection agencies or debt collectors can do?
Sorry, I just want to see. So where's that question? I'm just reading the questions here.
No, that's
again.
my question. That's my
sorry.
question.
Can you just repeat that again? Sorry, I was trying to get the lighting on here because it's a bit dark.
Yeah, so building on the question that Linda has asked, I have heard of people, and I've seen here that sometimes when the debt collectors or debt collection agencies, they can't get through to the debtor, or maybe the debtor is not paying up. So I have heard of the debt collectors reaching out to the debtor's colleagues to, maybe shame them into paying the debt, or maybe reaching out to the family members. So is that legally allowed? Is that something debt collectors, is that something they're allowed to do?
No. So I think, as I have stated, in terms of the POPI Act, for example, now that is actually forbidden. So you can be fined if you are found to be contravening that. And it's not just you, so it'll be the debt collector as well as the client. So, for example, one of the big banks in South Africa, or if you're acting on behalf of any of the massive credit providers, they could be fined as well as you.
Mm-hmm. I had
Thank you for
actually
the question.
seen, you're welcome. I had actually seen a post about this on LinkedIn. I had seen that, it was a manager or someone, and they had been contacted by a debt collector regarding one of their employees, and they had posted about it. That I just thought that it seemed like that's not something that's very ethical. That's not a nice thing to do.
Yeah, no, definitely. Yeah.
We have a question from James. Thanks, Atish. How would one strike a balance on recovery from debtors if allowed to extend days, considering the business too owes a lender?
Okay, so I just don't understand the question. Recovery for debtors if allowed to extend days, considering the business too owes a lender. So if I understand your question correctly, is in terms of the fast recovery methods, is that correct? Are you talking about cash flow here in terms of recovering debt versus paying creditors? I just want to understand if I understand you correctly.
I think maybe James means that if the debt collector, they do allow them an extension, how do they strike a balance? Because they also maybe owe a lender or something like that. It's about cash flow. I think that's what
Yeah.
James is
Cash
trying
flow.
to
Yeah.
ask.
Okay, 100%. Yeah, so I think that's where your planning would come in, in terms of your full cash flow analysis of your business. I think this has to be an ongoing process. And it's not just the one aspect that you would utilize. I think debt collection is one aspect, that you would utilize in terms of recovering your debt. But also the other aspects that I have discussed in terms of the other 7 points. So maybe renegotiate terms with your lenders, etc. I also think it's always good to build relationships with your own credit providers. You would know when specific clients or major clients are not paying you in time, and that's where it's critical to always plan moving forward. And I always say communication is key, especially in a business. So rather keep an open communication method, or sort of process moving forward with your credit providers as well, so that you could then strike a balance. And I'm hoping that answers your question.
We have a question from Joseph. We are providing input loans to smallholder farmers which are not secured. What are the best ways to minimize the default rates and most effective ways to collect the debts?
Okay, so I think unsecured lending by definition normally would have higher interest rates, right? And this is where, for example, credit providers would then work in their factoring in terms of the potential loss of credit, whereas secured lending would have a normal a much lower interest rate, obviously because you have the asset to then go after. So I think that's the first point: is your interest rate in a number game should cover you firstly for those losses. So that's the first point. And I think the best ways to minimize default rates there, and I think I've said this in my presentation, is to proceed earlier for the debt. So don't leave it for too long. We, for example, handle various personal loans, micro loans, etc., credit card debt, etc., which is all unsecured. And particularly, we would get a recovery rate of between 2 to 4%, 2 to 5% in some per month. So that is pretty much what you could look at recovering month on month. The thing is, if this is rolling over on a continuous basis, you would need to factor that into your sort of cost of lending, but also your cash flow projections.
James says his question was answered. That's great.
Perfect. Thanks,
we
Jan.
have a question from Edna. Edna says, I'm setting up a company that will help parents from low-income backgrounds pay fee. What must we watch out for to enroll those who are in real need?
Okay, so I think, doesn't matter who you're lending to. I would always say that you need to have a contract in place. Whether it's a one-page document stating that, and, I think one ways of deterring people from actually falling into arrears is having a contract in place stating that they are liable for legal costs should they fall in arrears. So lots of companies do it. And that is where, for example, then certain debt collectors would not recover the monies from the client, but from the debtor themselves. So, I always state, rather make it, or, make the person think twice before they have to default. I think the world has become as such that the person who puts pressure will recover their money, and the person who does not will not, essentially in time to come.
I agree. And do we have any other questions from anybody else? I'm sure we all must have doubts and we all must have concerns because not everybody is, aware of all the technicalities that are related to finances and debts. We are all still not very financially educated, I would say. So I'm sure we all must have questions. Yes, we do. James has another question. He says, how do you cover your costs if the debt is not recoverable? Debt collector is using percentage of recovered funds.
Yeah. So I think, that makes it tricky for us as a business. But essentially, we handle large volumes of matters. So it's essentially exactly how the bank works when they provide credit. They've already factored in what percentage would most likely default and what the interest that they're recovering would then cover. In terms of that, so we've worked on very similar models where it becomes a number game. We obviously assess all of our client mandates at the beginning of the month, beginning of the year. So there's a lot of planning and strategy that actually goes into play. in terms of understanding where we are per portfolio. That will also determine the cost that we would then give to a client. So for example, a client would give us, for example, call it R1 billion or $1 billion worth of debt. We could charge them probably under 10% collection commission. Whereas if it's smaller amounts of debt, we would then charge between 20 and 25% of the amount recovered. So yeah, that's pretty much how the models are worked out.
We have a question from Joseph. Can we get a sample of an effective business plan and business model for establishing a microfinance company?
So I'm sure someone's done an amazing presentation or assignment on that at EBS. Yeah.
We have a question from Majun. Do you have a sample contract of debt payment plan for debt collection process or deterrence?
So yeah, if you're asking, for example, a contract or a one-page contract that you can utilize to give your clients, yes, we do have examples, and I can maybe share a one-page contract as well when I share the presentation as well. Or you welcome to contact me directly, and I can help you with that.
All right. Do we have any other questions? Okay. We have a question from Cliff. Good discussion. Thank you, Cliff. When do you conclude debt as bad debt, and how do you reconcile such situations in book of accounts?
Okay, thank you. I think it's more on the accounting line, but I think I can probably try and assist you with that answer. So I think obviously each business would have their rules in place in terms of when they would write off specific debt. So for example, whether it's 180 days, etc., when you would then take it off your balance sheet, you would obviously need to show the accountants or the people in finance in terms of what you've done to try and recover it at that time. And then at a certain point, and I'm sure any accountant might be able to assess a bit better or answer this a bit better, but at a certain point, you would then be able to then write off the debt and take it off your balance sheet as a bad debt. Yeah.
Okay. We also have a question from Joseph. Examples of pressure letter.
Yeah, so I think there's a fine line in terms of examples. I think the standard letter is a letter of demand, where you state who you're collecting on behalf of, the amount that is due, and obviously banking details where it needs to be paid. That is simply what it is. But for example, we do credit card collections where we actually advise a debtor that your credit card will now be blocked, for example. So should you pass a certain period, first your credit card will be blocked. You will no longer have access to it, and then we will then move over to a normal letter of demand. There can also be other ways of, for example, there are applications which can be made where you can attach people's bank accounts, etc. So these applications can be made, but those are obviously a bit more costly, where you would need to go to the High Court, etc. But I have seen companies doing it. You can also hold directors personally liable in terms of the Companies Act, in terms of fiduciary duties, etc., where either people in finance or directors have mismanaged funds, and you can then hold them personally liable. So there are other means of debt collection which goes further and past the normal debt collection process, but that's more specialized collections.
All right. James says, thanks for the heads up. Great discussion. You're most welcome, James. Francisca says, hi, this is Francisca. I think this is amazing presentation and topic. Thank you very much. You're most welcome, Francisca. I do agree this topic can sound a little boring, but it definitely has been made interesting. And I think we are all learning something new. So I guess we all appreciate that.
Thank you for that. And I'm glad that there were so many questions, actually, because I was hoping that I didn't bore everyone and made everyone sleep early tonight.
Do we have any more questions from the attendees? Joseph says this topic was very interesting. Thanks everyone, especially our presenter. So that's for you, Atish.
Thank you, Joseph. Thanks. And it was an absolute pleasure doing this. I'm just glad that, there were some good points taken out of it. And I think, as I have stated, I will share my presentation. I'll just share my details as well, with the presentation. If you guys have any questions, you're welcome to contact me directly as well.
That would be very helpful, I guess, for all the attendees. So does anyone have any questions, any final comments they would like to make? Joshita says, thanks, Atish. It was a pleasure to join this talk.
Thank you, Joshita. I think you convinced me to do this, so thank you as well. And I think I'd just like to thank, Barija as well, and Hiba, thank you as well for your assistance.
You're most welcome, Mr. Atish. So
You're
I
welcome,
think
Atish.
if we don't have any more questions, we can wrap this up. I guess last chance to all the attendees. If you have any questions, you can just drop them in the Q&A box. If not, we'll wrap it up for tonight. Majun says, thanks for the nice presentation. Good support tools to business.
Thank you, Majun.
All right. So I don't think we have any more questions. So thank you so much, Atish, for sharing something so insightful with us. I think this is one of those topics, if you're not a business owner, if you're not somebody who's actually dealing with creditors and lenders, you don't think about this often. But I think we all can, benefit from learning more about it. So thank you so much for sharing that with us. And thank you to all the attendees for joining the session, especially to the ones who asked questions, who contributed, because I'm sure even the ones who didn't ask any questions, they learned something new from what was shared here today. So thank you everyone for joining. And just a final reminder, a heads up to all the attendees, those who have not already joined Eaton for the programs. As part of our Ramadan month offers, most of you must be aware we were running a campaign of 50% off on the short programs. So if that is something you're interested in getting deeper and increase your knowledge in any one particular sector and do a short course, so get in touch with your academic advisor. He or she will guide you, and I'm sure you'll make the most of the seasonal blessings the month of Ramadan brought in, and we'll see you at the next webinar. Thank you so much, everyone. Thank you, Atish. Thank you, Barija. And thank you to the attendees for joining.
Thank you. Thank you, everyone. Take care. Bye.